Hello and welcome to our AIM Summit webinar on how Fintech is democratizing finance. I'm your moderator, Zachary Separati, the CEO and founder at Dhabis Capital. If you're joining us on YouTube, please like the video and subscribe to our YouTube channel now. Go to aimsummit.com to be part of the live sessions so you can be part of the Q&A. Introducing our webinar partner today, as always, glad to have them back, the Abu Dhabi Catalyst Partners. ADCP is a joint venture between Mubadala Investment Company based in Abu Dhabi and Falcon Edge Capital based in New York City. ADCP was established in April 2019 with committed capital of $1 billion and has a dual mandate to achieve financial returns while also contributing to the overall development of the Abu Dhabi Global Market or ADGM ecosystem. They seek to partner with top-tier investment firms and industry-leading businesses who would benefit from developing a meaningful and substantial presence in the ADGM. It's such a pleasure to introduce our speakers from Abu Dhabi Catalyst Partners. We have Maral Sivzatian. She is the investment director on that team. We also have with us Jason Barsima. He's the co-founder and president of Halo Investing. And then we have Brian Muench, who's the president of Allianz Investment Management LLC and Allianz Investment US. It's such a pleasure to have these panelists with us today. We're going to be talking again about how fintech is democratizing finance. But first, we want to set the industry backdrop. What is actually happening? What are some of the key market trends that are belying this democratization of finance? Why has fintech been given this opportunity to come in? I'd love to open that up with Brian. If you could give us a little bit of an overview on what you're seeing with RA spinning out of large institutions, high percentage of customers investing and controlling their own wealth, losing trusts in the financial institutions that have been servicing them for years.
Yeah, well, thanks for having me today. Really a pleasure to be here. I'd say there are a few things that we see from the Allianz side as we look at wealth management trends and how fintech is helping with that. You mentioned one of them, which was we see that investors are becoming less trustworthy of certain institutions and how things used to be done in the past. So how they look to get advice today is different than how they've gotten advice in the past, which is to sit down with, say, an advisor at during lunch or what have you in a meeting. But really looking now at different ways of getting that advice. And I think as part of that advice, what they're really also looking for is customization. So one thing that we see in our studies is that investors really want the individual choice and options that are available to them. And in the past, for example, in the US, one of the biggest investment vehicles that are available are what's called target date funds. And these are, target date funds that are really built for the masses. They're not really built for the individual. And so the ability to really customize and individualize what the solution that they're seeking is definitely an area that fintech can help. Jason Barsima, who's on the line today, is providing that through the Halo mechanism and the tools that they provide, which I think is wonderful. I think the other thing that we see is that investors are really looking for what investment strategies have been available to accredited investors in the past. So more private type of strategies. I'd also put structured notes in that category of wanting to get access to those types of solutions. And then the last thing I would say, and it's maybe not so much around fintech, but just a general theme that we see in general, but that is investors really becoming in the US less risk adverse, or more risk adverse, I should say. So even with studies that we have, we find that 80% of investors are willing to give up some upside potential if it means that it can protect against losses. And so that's another trend in the wealth management industry that we definitely see, and we see that almost every study that comes out. So those are some trends that we see.
Thank you very much for painting that backdrop. And Jason, Brian alluded to some of the work that you've been doing. What are some of the key trends that are affecting the segment of the market that you're addressing at Halo?
Yeah, and I think that first and foremost, thanks for having us on. And Brian's comments were spot on. From the different trends that we're seeing in the market is, number one, you're seeing a rise, the importance of platforms, right? In everything in our life, whether it's the consumption of a financial product or the consumption of a traditional good or service, everything is going through platforms. And the industry that we disrupt to democratize, which is the $3 trillion market of structured notes, that change has not taken place yet until our company. And I think that that was really exciting about, the disruption that we've brought to the market. Is it's always been a traditionally clunky, process and clunky product for a number of different reasons, which we'll get into. But that's really the trend number one that we're seeing, is just the rise of platforms, and COVID exacerbated that. I mean, with COVID, you couldn't have wholesalers travel, you couldn't have salespeople travel. So unless you had a platform, then you were in a tough spot as a traditional distributor, and that's where platforms like ours and other alternative platforms around the world really did well. Number two, and I don't want to discredit this, is the demographics change. The world is getting older, and if you look at financial markets today, of kind of this risk gap between stocks and bonds, it's the widest that we've seen in at least 3 decades. And you're having that at a time where the world is getting older and older and older. So the world, which I think all of us would agree, we need something to fit or bridge that risk gap between stocks and bonds. We need more yield than bonds. We need less risk than stocks. We need something right in between. And that's where protective investing like structured notes, annuities, and buffered ETFs can play a critical role. That's a trend that you'll see for a long time. That's not a short-term trend. That's a mega trend that you'll see, as we have insurance on every aspect of our lives, whether it's our home, whether it's our cars, even our dogs, but we don't have insurance in our portfolios, and that never made any sense. So I think if you look back in the next 20 years, our kids will be saying, gosh, I can't believe you bought a stock without protection. You're crazy. And I think they'll be right.
So, Maral, you're currently in New York, but you're based in Abu Dhabi, and I can see a lot of the attendees in our session are from this region in the Middle East. I'd love to understand your view and perspective on some of these key market trends, particularly those that have been highlighted, and looking at that through the lens of the trends that you're seeing in Abu Dhabi as well.
Sure. Thanks for having us again, Zach. I think just to add to what Brian and Jason have just elaborated on, there's been a really key generational theme that we're seeing across all our investments, right? Regardless of what sector or what structure we've invested in. The generation that are investing now and that are building companies, whether it's out of the ADGM or New York or London, they've all lived through, or mostly lived through, 2 financial crises and a global pandemic. So everybody's demanding better education around investing, easier access to investing, and higher transparency. And a lot of that comes together when you bring, financial technology in the right regulatory environment, coupled with the right education. And that's something that Halo has done really, really well. And that's one of the things that we've made a decision as a team to get more and more up to speed on, and to really build depth around those clusters where you're providing access to safer products, longer term investments for the average person in a very safe environment. And all of those trends that we've just sort of talked about come together, whether it's fintech, whether it's digital infrastructure, whether it's security. And a lot of our investments are going more and more in that direction, backed by and surrounded by other investments and asset managers, which feed the ecosystem as well.
So we talked about some of the longer term trends, the kind of mega trend on the style of investing, the investors that are looking to be able to participate in more equity-like returns, but with reduced risk. The challenges that they have in the broader markets in achieving that, and how structured notes and a lot of structured products provide a solution to that. But again, one of the key issues, and I mean there are several issues around structured notes, how they're distributed, how they're placed, the incentives, the transparency. Structured notes in the Middle East don't necessarily have the best name as a solution, or the best reputation as a solution. How is fintech addressing these issues? How is it providing access, efficiency, transparency? How is it, dealing with a lot of the pains? What are the pains around this financial solution? If you wouldn't mind highlighting, Jason, how these platforms are addressing it, how Halo is actually addressing the problem at hand.
Yeah, and I think you're spot on in regards to certainly some of the problems that the structured note market has. And I would say that those problems just aren't exclusive to the Middle East. It's all around the world. I always make the joke of, Google the word structured note and see what comes up. And the first thing that comes up are the FINRA warnings of the fees and the complexity and the lack of liquidity and et cetera, et cetera, et cetera. And that's the beauty and the elegance of technology. As I always say, just like our iPhones, right? Technology makes the complex simple, right? And technology makes things that weren't transparent, very transparent. And so when we started the company in May of 2015, we started on a very simple premise of not really the disruption side, candidly, it was really about the democratization side. As we talked about in the previous question, I humbly believe that the world's largest epidemic is the state of people's savings and retirement. The average retirement savings in America is about $63,000, and it's almost virtually impossible, to retire off of $63,000. And most of America, and then when we started to put on our global lens, we realized that this was continent around the world, but most of America has stocks and bonds and again, nothing in between, and they're forced to take the body blows of the market, and that's not fair. And so structured notes can't solve all of those problems, but they sure as heck can solve a lot of those problems. And that was the budding thesis of Halo, was take this product, which was only available to the rich, and give it to everybody. Now, the cherry on top is through technology, we made the product sufficient for everybody, no matter how big your wallet size was, but the premise was really about the democratization. So with that, when we started the company, we really wanted to focus on solving what I believed were some of the main product problems, kind of moving into the disruption side, which were the high fees. Our technology reduces fees by up to 70%. And with some of the innovations that we're going to be doing in ADGM, that will be 95% easily. Number two is we want to bring transparency to the product. Nobody has a problem paying fees as long as you know where the fees are. And no one has a problem buying a product as long as you understand how they're constructed and how they're packaged. And so we had a big focus on transparency. We had a big focus on competition. One of my beefs, I spent my career at Credit Suisse, as a quick aside, on the private banking side, managing portfolios for ultra high net worth individuals and institutions. And I was one of the largest buyers of structured notes at Credit Suisse. And one of my beefs was every time I wanted to buy a product, it was like working with like a travel agent before Orbitz, right? I would have to call my desk and they'd have to call all the different, banks, and it's a boys club. All the banks were somewhat similar pricing and there was no price competition. That really rubbed me the wrong way. But yet I didn't have the influence to be able to, solve that problem or disrupt that problem until I had to leave Credit Suisse and do it myself. And that's really what Halo is. We insert the first competitive auction process where we, make our banks compete. Now we add the banks, a lot of technology to help improve their margins. So some of the fee grind that they take on this competition side is made up in more efficient manufacturing processes. But nonetheless, we make them compete for your business, which is what every capital markets product should be, right? I mean, you look at equities, you look at bonds, you look at options, there's price competition in every asset class except for ours. And so those days are now over with our technology. I think that solves a lot of the problems, Zach, that you were mentioning in the Middle East. And then lastly, it's about providing independent liquidity. So one of my other problems with the product and ultimately what technology solves is if you want to sell your structured note prior to maturity, you can only sell it back to the issuer. And you don't need to be an economist to understand that, if there's only one apple cart in your town, it's going to be pretty expensive apples. And so we wanted to bring, more independent market makers that will make active markets on these notes. Again, we're going to be taking that to the next level within ADGM, which is very exciting. And we can get into that at a later date. But we brought in 6 independent market makers that will make markets on most notes on our platform, collapsing spreads in the secondary from about 3 points down to about 25 to 35 basis points, depending on the structure. Now, all of that is through technology, right? And so what I want to do is saying, let's bring more transparency, let's bring more scale, let's bring more accessibility into this market so all of us can have access to these products and do it with a focus of education, of analytics, of portfolio fit tools, and then some of the creature comforts, which is make a click to trade. No one wants to spend 2 days buying a structured note and brokering back and forth. And so that's really, I think, the benefit and the bonus of technology. And then we just started adding on other products on top of that. So we started with structured products. Our run rate is about $11 billion in transactions on an annualized basis. making us one of the fastest growing fintechs in the world. And we're proud to be partners with Allianz and Catalyst for many different reasons. But now you need to take that success and turn it into significance. And that's what I'm really focused on doing within Abu Dhabi, is let's turn that success into significance by making a profound impact, not just in America, but all around the world.
So, okay, so this is obviously something.
I left a lot to unpack there.
Yeah, it's a lot to unpack. So let me just unpackage it for a second. So what we're saying is basically in the backdrop of this market where, bonds are yielding you nothing. So everybody's kind of getting pushed into equities. But, how many people want to risk their entire nest egg on equities? So we've always had this elegant solution called, structured notes. But the problem with structured notes has been and the things that created a lot of the reputational issues around that sector were the fees were very high, they were inefficient. The size of these instruments, the barriers to entry meant that it was only for the rich and the ultra rich. They were intransparent, very opaque structures. You didn't really understand what you were investing in, and all of those things then led into a poor secondary market. Anytime you have high barriers to entry, you have high fees, you have lack of transparency, you're going to have an illiquid secondary market. So what you guys are doing is you're taking a platform like what has addressed so many problems in other markets, whether it's ride sharing or
Exactly.
using. It's putting that into a platform, into a solution with fintech to answer all those problems, to make it efficient, to make it accessible, to provide the information, the transparency, and all of those things converge to provide liquidity. Now, that is also opening up, creating a much bigger pie. And that's something, Brian, I'd like to maybe ask you about is, what does this mean for growing the market? If you're making this market more accessible, more efficient, having better information, having better liquidity, can we see this structured note market grow from, I think it's about $3 trillion today to, tens of trillions in the future?
Yeah, I think you do. I don't know what the number is, and maybe Jason will have a better idea on that. But I look at this as really defined outcome investing. And I think structured notes really was the leading edge of that. And I think what Halo is doing is going to provide that ability to scale this even to a much higher possibility with more unique and customized solutions, which again, as I said before, I think is really going to be important. The one thing that was hit on earlier that maybe I would just hit on again, and I think it's this belief, because I know Jason and I have also talked about it in the past as well, but it's this belief of, investing shouldn't be an all or nothing type of a situation. And I think that's really what it's kind of come down to, because fixed income is a really hard place to go right now. I think it's going to be that way for a while. And with equities, in the US anyway, the S&P 500, that averages annualized, call it 7-8%. But if you're an investor and you stayed invested, you took a very lumpy roller coaster ride to get there. And I think the whole idea with defined outcome investing, which is why I'm so passionate about it, is you can get to a very similar result at the end of the day, but you can take away all of those bumps and roads, because the other thing that we didn't really touch on, but what happens is investors get in at the high. So when the stock market's already high is when they tend to get in, when they shouldn't, obviously, and they tend to get out when the market's already suffered some losses. So they sell at the low. And I think through structured type of product, that allows them to stay invested because they know what their objective is. They know what their outcome scenario could be. And so if you can protect some of that downside, protect some of those losses, they're going to stay invested. So I think just the nature of what the solution of defined outcome investing in, whether that's structured notes, whether that's annuities, or whether that's buffered ETFs, is going to rise all tides into this overall market of risk management. And I agree with Jason. This is a big trend. This is a macro trend. This is why Allianz is also very bullish on it. This is, I believe, the new way forward.
And Maral, the work that you guys have been doing at Catalyst in terms of enhancing this the strong international hub that's been created in the region out of ADGM. I'd love to understand how Abu Dhabi is fitting into these key themes, what it's doing as an international hub, how the regulatory environment and the focus on tech is really enabling these platforms to achieve the potential that they may struggle to achieve in other markets.
Sure, I think the ADGM has so many selling points, but you can summarize them into sort of three buckets when it comes to fintech specifically, or anything really, but specifically fintech. The first is the obvious one, which is the geography and the time zone within which it sits. So scaling any operation out of the ADGM internationally is just easier, quicker, more convenient, which is why Halo's chosen to anchor its growth and expansion to emerging markets outside of Abu Dhabi. The second one is that we're really lucky to have an open, forward-thinking, and forward-looking regulator that doesn't have to carry a ton of legacy issues behind it or behind every decision it makes. So the FSRA, as you'll know, Zach, has developed a really robust end-to-end framework for regulating digital activity. It's the first regulator in the world to do this. And that includes, regulating whether it's coins, funds, digital infrastructure. That's all in place in a very robust and transparent framework and ready to go. And the third thing is clearly access to capital from Abu Dhabi and from other pockets of finance in the region. And if you overlay those three things with the fact that the ADGM has, the protection of English common law, then it becomes a really, really strong value proposition for companies like Halo, companies like Securrency, who we've invested in, companies like Lookout, who do mobile security, and a range of others to come and say, yeah, this makes sense. We need to be here. It's not that we want to or we'd like to. We actually need to be here because this is the best place to do this.
And I would love to echo those comments too, because when Morale says you need to be here, I mean, we literally need to be there and fulfill our mandate of democratization. And so, for our platform, before Halo even existed, the cost to buy a structured note was $1 million to $3 million, depending on the house. On our platform, you can buy a structured note for as little as $1,000. So that's fantastic. Obviously, that's true disruption and true progress. But if you're going to put structured notes in every single saver around the world, including those in emerging markets, you need to get them down to $1. And you can't do that without the flexibility and the credibility of the regulatory authority that ADGM has in FSRA. And so through smart contracts and blockchain, which we're going to be partnering with some other ADCP portfolio companies and ADGM companies to be able to do this on a joint venture basis, it'll be able to remove again, about 95 to 98% of the cost to manufacture a structured note, which means that we can do custom printing at $100 and break these down into $1. So every dollar saved across Africa, Latin America, et cetera, we'll be able to have a protected investing solution. And when people say emerging markets don't have any savings, that's actually false. They actually have a lot of savings. They're just might be a lot on an individual basis, but collectively they have a lot of savings. And that's where these products, I think, are exponentially helpful to be able to grow and expand those savings and, again, fulfill our mandate of impact before profit. So make a long story short, we literally could not do what we want to do without ADGM and of course, the great support of ADCP. And so I think that from our perspective, our headquarters, just to give a little preview, our global headquarters is in Chicago, but we have an office in Zurich and Singapore, Dubai, and now, as Morale was saying, we're going to be establishing our international headquarters in Abu Dhabi. We comb the world for where's a place that we can grow, that we can scale, that we can innovate alongside the regulator in a very credible regulatory environment and get things done quick and partner with those who truly want to change the world for the better. And we went everywhere. And I'm not discrediting any other country, but the only place that we found, we spent this search for 2 years. The only place that we found that could actually pull this off with us was Abu Dhabi. And that's what really, really gets us excited. And it'll be a major, major hub, for us globally, our largest outside of Chicago.
Well, actually, going back to some of the key trends, we talked about the kind of investor side trends, but actually one thing that we haven't touched upon were things on the issuer side, and you have alluded to them. What new opportunities. I mean, one trend that we're certainly seeing in this region is more sovereign issuances, and what we're seeing globally is issuers of various instruments looking to do things with the investment banks that typically or historically have controlled the market having less and less of a role. What opportunity do platforms like Halo create for sovereign issuers or for issuers in general, non-bank issuers and corporates to potentially issue notes on a platform?
You're taking a piece out of my playbook. I love it. And so, that's candidly what gets me the most excited. We have a number of different initiatives, but two in particular get me most excited. The non-bank issuers are one of them. And obviously debt issuance is at a record high given low interest rates. But one of my problems with the product, even for my own family, where 25% of my family office is in structured notes and has been for 15 years, is that I'm not diversified on my counterparty risk, right? I have different banks, but they're all banks, right? And so if I built you a corporate bond portfolio and they're diversified, but it's all auto credits, you'd fire me. Yet that's what I do with your structured note portfolio, right? And so what's really interesting about Halo is our technology has basically allowed us to create the gig economy for structured notes. Just as you were talking about Uber and other ride sharing apps, back in the day, it was only the taxi cabs with the medallions who could drive us. And now anyone with a car, can have that medallion. With Halo, anyone who issues a bond can now issue a structured note with our technology. So think about it from a Mubadala perspective or Department of Finance if we talk about the sovereigns, or an ADNOC, or in our country a Pfizer or a state of Florida, a Microsoft, et cetera, et cetera. Anyone who issues a bond can issue a structured note. And I think that that's really important because it gives people choice. It provides more competition into the market. And more competition ultimately benefits everybody. So I like to call that kind of my Amazon basics. If you think of Halo like an Amazon platform, no one's saying that you can't buy the JP Morgan note or the Credit Suisse note, which is my home bank. Nobody's saying that. We're just saying there's going to be more competition and more choice, which is ultimately good for consumers and the banks themselves because it forces everyone to innovate more. No one else is doing that. And that's the importance of being an independent platform, right? And we've made the choice, even though we have taken outside capital from professional VCs, we've made the choice to remain independent agnostic. So we don't take any orders from any banks or any product manufacturers. And that's really important to us because this allows us the ability to innovate and make the change that we want to make. And you'll be able to buy those non-bank issuers, by the end of this year on our platform. And with some of the innovations that we're making through Abu Dhabi, ultimately, again, you'll be able to buy a structured note for $1. Potentially from Mubadala or the Department of Finance. And I think that that's good for the issuers too, because it lowers funding costs for the issuer as well. And it allows them a flexible and scalable printing press. Because if the last point I'll make on this is if you think about from a Mubadala perspective, which actually has been issuing a lot of debt as other nations in the GCC have, when they issue a bond, they're targeting 20% of my fixed income portfolio, but they're missing out on the other 80% of my equities. Right? Structured notes are equities. And so by having a structured note program, now you're being able to open up the entire wallet to, a Department of Finance or an ADNOC or any other entity who's issuing a structured note. And I think that that's really exciting because it just allows them to have more wallet share, which ultimately reduces funding costs, which has its own multiplier effect within the country. So, this technology benefits both the issuer and the purchaser.
So, Brian, at Allianz, you've been really leading a lot of other innovations in the protective investing market. Could you maybe tell us a little bit about buffered ETFs and annuities? And if you could maybe explain what these are, how they work, and tell us why it's an important part of the market.
Yeah, it's a good dovetail too, because, I think what Jason was kind of getting at was the how of how fintech is able to really make these changes with some of these structures that have been around for a long time. Going back to the what and what are some of these structures, what we've recently done, we launched this last year, was launch buffered ETFs. And so the concept of defined outcome investing is not new. You've seen this in structured notes, you've seen this in annuities. What's new is that it's now in a different wrapper. It's in an ETF wrapper. And we launched that last year. The market is only about 2 years old, going on 3, I guess. It launched in 2018 from a market standpoint. But Cerulli Associates have already defined this as the fastest growing segment in the ETF marketplace. So you have ETFs in the US is about 6.5 trillion. And this is the fastest growth of that overall marketplace are these defined outcome buffered ETFs. So what are they? They're very similar to a growth note in the structured note space. It's just a different wrapper. But quickly kind of going through how these work is we look to mimic or track the return of the S&P 500 price index. And what we do with that is we have a cap. So this is how much you can participate up to a certain cap that we define at the beginning of an outcome period. And then we also have a buffer. So we have 8 different ETFs within the Allianz buffered ETF family of funds. 4 of those have a 10% buffer. So the fund itself takes the first 10% of losses. And then we have a series of 20% buffers. And those funds take the first 20% of losses. And so what really gets me passionate about this is if I look at defined outcome investing and I look at what these buffered ETFs provide, there's really only 4 scenarios. Like if you start at the beginning of an outcome period, and when I say outcome period, all of our buffered ETFs have a 12-month outcome period. Now these aren't debt, so it's not a maturity. You can invest in these indefinitely and they're fully liquid as well. So you can own these for 12 seconds, 12 months, 12 years, whatever the right term might be for what you're looking at. But of these 4 different outcomes that you can have based on what the underlying does in terms of performance or what the buffered ETF does, the buffered ETF will either match or be better on a relative basis performance-wise before fees, with the exception of only one scenario. And that scenario is a very positive market scenario. So if I look at our April 10% buffer series, when that was launched, the cap that we had was 13%. So what that means, if you bought this on April 1st, and 1 year later, 12 months later, the market S&P is up, say 15%. You're not going to get the full 15%, but you're going to get the 13%. So you're missing out on 2. But I go back to, if you're an investor, that's probably exceeding what your expectations were for equities to begin with. If you're looking at an average return of the S&P 500 to 7 or 8%, you're pretty happy that you achieved beyond that, but yet you can still have you can sleep better at night. You have more conviction that you're going to stay invested, because if the market goes the other way, you're going to be protected from at least some of those losses. So that's the genesis of how these work. The other part of that, going back to the how, we actually added these on the Halo platform. So now on the Halo platform, you have more than just structured notes. You have these other types of structures. Just different wrappers. They're similar in how they can work, but they have different wrappers, and some of those can have different elements to them. But we think the technology that they offer, the analytics, the education, is a great way, because Allianz is more of a product manufacturer than a tech platform. So this is why we really enjoyed the partnership with Halo.
Thank you. And I think that that's the importance of being independent and product agnostic, right? Is that, we believe, and I believe, in a world where everyone should have protection in their portfolio for all the reasons we've outlined during this presentation. And I do think it's not a nice to have. I think it's a must have within portfolios. But to that point is we want to provide and give that power to the people. So I want Zach to be able to define what he wants to achieve within his portfolio, or what type of exposure he wants within his portfolio. And then I want to serve up the most appropriate wrapper for Zach, right? And that might be a structured note. It might be a buffered ETF. It might be annuity, or it might be a mutual fund. And again, that's what we deserve as investors, is that agnostic, independent, transparent view in a low cost way. And that's, again, what technology does, which is why we partner with top-notch product providers like Allianz. And we've partnered with Allianz almost since day one. And so I think that that's a good testament to the technology that we've got, but also to the great product innovation that Allianz brings to the market worldwide.
And just expanding on that, what are some of the key differences with how these, I mean, you've certainly alluded to it, but with how these products and solutions are addressed for clients in a platform format versus how they're addressed, how they have been historically? What are some of the conflicts of interest? What are some of the key challenges? Again, we've touched upon them, but I'd love if you could maybe expand on, really some of the, the good, bad, and the ugly of particularly the bad and the ugly of the problem that you're solving here.
Yeah, I'd love to take that first, Brian, and then I know you'll have a number of different thoughts. But from the technology standpoint, what I like is that, again, Halo is a marketplace for protected investment products. So it allows Morale to go in and say, okay, I want to structure a 1-year S&P 500 structured note, and I want to compare that to the buffered ETF net of fees. And then I want to be able to see how each one of those impacts my entire portfolio. And I think the problem that I always had as a former financial advisor is that I see everything independently, right? So I go in and I search the buffered ETF, if it existed back then, and I only read the material from Allianz, which obviously would be biased, right? And I would never be able to compare it to another similar wrapper, like an annuity or like a structured note, because there are trade-offs to your point, Zach. I mean, you have great liquidity with a buffered ETF, absolutely, and there's no counterparty risk, but you could have better investment terms with a structured note. So there's a trade-off depending on what Zach wants. Do you favor liquidity and no counterparty risk, or do you favor a higher cap? And only you can make that decision. And that's what our technology does. And I think that that's the hard part is, what Morningstar did with mutual funds, right? Where it allows us to compare side by side different mutual funds and different wrappers. That's exactly what we do in the protected investing space with all of our analytics that Brian was talking about. And of course, you can execute and monitor and manage and sell through our platform as well. But that's the big challenge that I love about our platform, is being able to compare side by side agnostically. Brian, maybe from a product detail, I'm sure you have some thoughts.
Yeah, actually, I would even start from like the advisor standpoint, because we've seen this and we've heard this from a lot of advisors that we work with at Allianz, and it is a situation where they'd rather not go and look at 10 different carriers, insurance carriers, and try to go to their website or talk to their wholesaler or rep to understand the product themselves. They'd rather have one-stop shopping. Go to one place, go to one market center, and be able to really make those comparisons, get that education, and have the ability to conduct their own due diligence. Like I said before, I think you have, especially younger generations, I think, have gone down the path of they do a lot of their own internal, independent research on their own. So, they're not going out and wanting to talk to an advisor over lunch. They're listening to their friends, they're looking at social media, they're looking at other ways. And so if there ultimately is a way, and I know we haven't gone to the path of direct to consumer, and we're still talking about advisors, but with advisors, that is a trend that we've seen where they just don't have the bandwidth to really look across all the different products from all the different carriers. They want to go to one place. So I think that's probably the biggest thing at the end of the day. And then I think it comes down to some of the analytics that Jason had mentioned. And I think what the world needs is a different set of analytics than probably what they've had in the past. Because with defined outcome investing, it's not about per se how much upside potential I have. A lot of this is around downside potential and being able to cover your downside losses through a more finesse type of a mechanism.
And you need to be able to have that technology for the analytics. Like if you think about where analytics were before Halo, is like where video games were before Xbox One, right? It's like you buy your video game, you have your instruction booklet, and we'd all spend an hour memorizing A is to pass and X is to shoot if we all like to play FIFA, which I do. But now you pop in the disc and you learn as you play. With financial products, it's been just like that, where it's here's your 2-page fact sheet, here's your white paper. Like none of us want to read that anymore. We don't have time. And so you need to have a platform that has videos and content, which we have a big focus on for our education, but you also learn as you play. And I think that that's really the engaging part of our platform in particular, is that it encourages people to learn about these products and actually understand these products. And that's been a big challenge, Zach, as you pointed out earlier, about our marketplaces, or about our product, I should say, in structured notes, is a lot of people just didn't really get it. And they had bad optics. And I'm proud to say 50% of our customers have never bought a structured note before. So I think that thesis and that strategy has paid off.
Yeah, and certainly again, the every platform business benefits both sides of the transaction from the network effects. I mean, Brian highlighted this kind of one-stop shop solution. Why does a merchant list their goods on Amazon? Because that's where the customers are. Why does the customer go on Amazon? Because that's where the merchants are and they have the product category. And that becomes self-fulfilling. Why do you book an Uber instead of a, whatever third-party platform? Because that has more drivers. Why do the drivers go on there? Because that's where the passengers are. So these platforms, the ones that are able to aggregate and provide people with a one-stop shop and the best solution where they're able to compare and get something that delivers to them efficiently, tend to not only make markets more efficient, but better for the customer. But there's actually a question here from the audience that I'd love to ask. It's from an anonymous attendee, and they've said, if you plan on creating your own structured notes, particularly to address diversification of credit risk, aren't you competing with some of the issuers on your platform?
Yeah, so that's a great question. And to be clear, we are not creating our own structured note. You're not taking the counterparty risk of Halo. We're just adding more credit. So instead of taking the counterparty risk of Halo, and I'm just using an example, I'm not saying that they're going to be a counterparty because we're not disclosing the counterparties who are doing this yet. But let's just say the state of Florida, right? And so instead of the state of Florida issuing a coupon-bearing bond, they would be issuing a structured note, right? And so if you bought that structured note, you'd be taking the counterparty risk of the state of Florida. So yes, would there be more competition on the platform than the traditional banks? Absolutely. But I already have competition because I have 30 banks on my platform globally that are structured note issuers. So there's already competition. It goes back to the point that you made about Amazon, right? Is that you have to bring in more suppliers. And ultimately that's good for the market, because if you're going to 10x the market, and Zach, I totally believe, the same thesis of this market will 10x with our innovation, our disruption and democratization. If you're going to 10x the market, there's only so much banks can issue, right? It's debt. And so, you're going to see those banks capped out anyways. And so if you bring non-bank issuers into the market with our technology, that's actually good for those banks too, because they can still participate in the hedge. And that's where, that's where a lot of the profit is for structured notes anyways. And so, in fact, our banking partners quite like this. But just to be clear, you're not taking Halo's counterparty risk. You're just taking non-bank counterparty risk.
So, Brian, I would understand that an organization, institution like Allianz with I don't know what the total AUM is, but I know it's some huge number that starts with a T, right?
Yeah.
So, normally a big juggernaut institution would have a deeply vested interest in doing things the way they've historically been done. And large organizations, institutions tend to be very conservative in that way. But Allianz is entering into this innovative space, partnering with a platform like Halo. Why is Allianz doing this?
Yeah, if you look at Allianz, it's a very large organization. We have 100 million clients or customers, private and corporate, and we are in 70 different countries. So we are a leading insurance company from that standpoint, and we're a manufacturer. And so there's a realization that there are certain areas within technology that we think we're pretty good at. There's other areas where we believe the marketplace is going to want to hear from independent parties versus hearing directly from Allianz. And I think that it's different across region, it's different across countries, but there's also the technology aspect to it. Getting access now is they want to be able to, get on their platform, even if it's their phone, to be able to research and do the things that they want to do. So, even though that we're a big organization and we've demonstrated our financial strength not only through our ratings but the actions that we've taken, which has served us very well. One element of being able to provide these solutions is not just the product itself, but how you can have that distributed via new means, and that's why we're really excited about Halo. The one other thing I would just note, as we were talking on the last session, as it related to issuers, I didn't make this point on the buffered ETFs, but with buffered ETFs, it's not Allianz that's actually issuing this. These are ETFs, so these are exchange traded funds. There isn't a credit risk, there's not a counterparty risk associated with that. So I think even that makes that world bigger in terms of opportunities to get these types of protected growth type of strategies.
And Zach, I would just add one very important point here. And I love the Amazon analogy, because everyone we spoke to when we were doing diligence on Halo, whether on the issuer side or on the RIA side, everyone referred to Halo as the Amazon before Amazon. And I think that's great. And it's really empowering, and it really makes you understand how scalable and how big this can grow. But the crucial difference is the issuers on Halo's platform are all creditworthy, very high creditworthy issuers. So Halo won't onboard anyone. They have a very rigorous KYC process. They have 27 issuers on the platform now. Correct me if I'm wrong, Jason. And they take that onus of responsibility to make sure that it's the highest quality credit ratings that are making offers on the platform. It's not just anyone. And remember, like they are a broker dealer registered in the US. That's one of the most heavily regulated activities out there. So yes, structured products may come from a risky bucket in the market or have a bad reputation. But if you combine all those things together from a risk perspective and then add the Amazon analogy, then yes, it's a fantastic story. But I think it's an important point not to forget.
Thank you.
Actually, another question from the audience. I think this is particular to Halo, but just in general, how would this work around white labeling solutions?
Yeah, so we white label for institutions all around the world. And so we obviously have the Halo branded platform that we provide, independent financial advisors across 5 continents now. But we also white label our technology and customize and tailor our technology to the specific needs and uses for, larger organizations like big private banks or large broker dealers or large custodians or large product platforms, as we call them, TAMPs, in the US. But we do that all around the world, case in point, even in Africa, we power one of Africa's largest banks, and it's a completely tailor-made white label platform built from the ground up, which has had tremendous success within Africa. And we do that all around the world. I'm just giving one example of an instance where we white labeled and really tweaked and tailored to meet the specific needs of the country or the bank. So we're happy to do that. Make a long story short.
Well, we're certainly big believers in platform businesses, and I think that what we're highlighting here is really a real use case of how, again, going back to the title of this session, how fintech is actually democratizing finance. It's providing a solution for one of the most undemocratic parts of finance at a time when it's most needed, at a time when, again, fixed income markets are challenging. Putting your retirement into equity markets or Bitcoin, is without a defined outcome, without understanding. Ultimately, investors have certain outcomes that they need, and fixed income used to be very good at providing that outcome, but unfortunately, in this environment, which I would agree with Brian, doesn't look like it's going to be changing anytime soon. They've had to look in other places, and certainly what these Halo is doing, what platforms are doing and achieving in terms of addressing this investment issue, but also addressing the issues around these products, which historically have been so undemocratic, is certainly a trend that we'll see continue. We do have another question from an anonymous attendee. He's asking about structured product desks seeing opportunities to democratize their product through Halo and achieve much larger distribution. Do they see a threat of cannibalizing their own value proposition to their customers? Do they have a choice which investments to offer to their clients through Halo's menu?
Yeah, absolutely. And I'll answer that in 2 parts. So number one, we work with issuers in the issuing desks all around the world, as we are a 2-sided marketplace. And we introduced what I call Henry Ford's assembly line for structured notes. As you could tell, we like metaphors at Halo. But if you look at how structured notes were assembled and manufactured before our company, it was like how cars were assembled before Henry Ford's assembly line: super time intensive, cost intensive, human intensive. So our technology actually removes up to 60% of the cost of manufacture, which means obviously the bank has a lot of those savings and they can either put them in their pocket or pass them on to the customer, which we encourage, in regards to better investment terms. One of America and Canada's largest banks, Bank of Montreal, we have more than 5x'd their flow since we have started with them just over 2 years ago. Just in 2 years, we've 5x'd their flow. And that's because the savings that they're able to put back in the note has made them exponentially more competitive. So they're actually not cannibalizing their desk. In fact, what they're doing is they're increasing their flow, providing more transparency and actually better pricing to the market. So Zach, again, using the Amazon metaphor, as you did earlier, people come to us because they're going to get best pricing because our technology helps these issuers manufacture more cost effectively and at better investment terms for lower investment sizes. So we have a full suite of tools that help issuing desks introduce a true click-to-trade process and be able to automate that and remove a lot of the frictions that were once involved with manufacturing a structured note, benefiting the buy side.
Another interesting question from Rahul Diwan. He's addressing the settlement issue. The settlement can be quite time-consuming for structured products, and sometimes a change in the market can cause risk or back out by customers. He's asking whether there are any innovations planned or being considered in the settlement process, such as using crypto, and whether there's a technology and platform that might be able to address the settlement issues, particularly now that these instruments would ostensibly be more liquid.
Raul is spot on, and so while we are blessed and fortunate to not have many settlement issues with our clients, nonetheless the process, even irregardless of a DK risk, is just clunky, right? It's T+3 settlement, and so we've made a number of innovations within the United States and home markets that we operate throughout Europe and Africa to be able to condense that process and make it a lot more streamlined and click to trade. And so what we can do and what we have done within the US and Europe is integrate into core banking systems. So we connect the Halo platform inside that core banking system and directly to the issuer. So it's literally straight through processing and direct booking. So you don't have that settlement issue. That being said, through smart contracts, you can solve these problems and really go one step further, which I think is really exciting. We're actually working on this with a partner firm of ADCP, and we're going to be making a lot of those innovations out of Abu Dhabi. And again, it goes back to why we chose Abu Dhabi. We found Abu Dhabi before Abu Dhabi found us, as I like to say, and those were really because of the innovations that we could have. And so, next 12 to 15 months, you'll see something that's pretty radically different in regards to the settlement process, and that's all direct IP for Halo and our partners. So it'll be really, really exciting, really exciting.
Well, I've found this, actually, I never could have expected a session on structured notes to have been so exciting, actually, to be honest with you. I really find what you guys are doing is incredibly interesting. I think it's good for the market. It's good for market participants. It addresses, so many of the frictions that exist. And yes, there will be cannibalization. There will be some disintermediation. There will be, but overall, I think this is good, making the pie bigger, right? If you turn a $3 trillion, if platforms can turn a $3 trillion market to a $15 trillion market, yes, some players are going to be getting a smaller piece of the pie, but they're going to be ultimately addressing a bigger pie that's much more efficient to operate, that's much more efficient to execute. So I think that's something that I'm really excited about. I'm so excited that you're going to be right up the road from us in Abu Dhabi. I working with the Catalyst team with ADGM, I think is going to be an incredible hub for the region, and I'm really proud to have been able to moderate this session and to have you guys on with us. Mural, I don't know if you wanted to add anything about bringing Halo to the region, but would love to.
Definitely. I mean, we are. Look at your excitement. Imagine how excited we are. I think with Halo, they ticked every box for Catalyst, right? So they're they have this wonderful scalable business model that they've proven in the US, which is a very, very tough market as it stands anyway. They have a group of phenomenal partners and shareholders, starting with Allianz and then others like William Blair, Owl Capital, and all the institutions they partner with, all the RIAs that they've had long-term relationships with who use the platform. All those people are people we want to bring to Abu Dhabi to see the benefits of the ADGM and to support the growth of Halo. And several of them have invested alongside us in the round and are underwriting that next phase of growth out of the ADGM. So that is Catalyst's bread and butter, and Halo has ticked that on every box. And they're bringing a huge team of talented people who are going to bring a lot of knowledge contribution to Abu Dhabi, a lot of techie people who I look forward to working with and understanding the platform better, a lot of sales people, a lot of senior executives, which is just what the ADGM is looking to achieve. And we can't wait for them to be there.
Neither can we. I mean, there isn't a better hub. And as Morel said, it's not just Halo. We're bringing all of our partners in, our issuers, with some of the innovations we're making out of ADGM. They'll all be coming to ADGM as well. And so it's going to be an awesome ecosystem. And we're blessed to partner with ADCP and Abu Dhabi and ADGM itself.
Well, we'd always be happy to welcome anyone who's coming out to the region. Go to ADGM, check it out. If you're not familiar with Abu Dhabi Catalyst Partners, they have a website that's very informative, adcatalystpartners.com, that gives a lot of information about some of their portfolio companies, their mandate. It's a really interesting mandate that they're deploying in ADGM and bringing great innovative companies like Halo. It's been such a pleasure to moderate this session. We are out of time, but I'd like to again invite everybody to attend our AIM Summit in-person conference. That's going to be taking place in Dubai on the 11th and 12th of October. I'm sure you'll see participation from the Halo team there and from Abu Dhabi Catalyst Partners. We're looking forward to welcoming you there. Thank you so much to everyone who joined this session. To our participants, thank you so much to everyone, and be sure to subscribe to the YouTube channel so you get notifications when these recordings go live.